Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 25th of September. So we finally saw some big moves this week. Some of the majors really broke out of their key zones. The EURUSD, the Aussie USD, and even the S&P 500 really started to move, and the dollar-based bear started to increase like we were hoping they would last week. So we'll jump straight in and have a look and see what we can find for opportunities today and early into next week.
So we'll start out with the Aussie USD. We can see here on a 1 hour chart that it's been an absolute free fall. It's barely touched the 20 moving average on its way down. But to get a real picture of what it's done, we'll go out to the daily, and you can see here it's just been a basic week of absolute selling. It's broken down past all of the key moving averages that have held it up all this time. So probably most importantly, it's actually broken down past the key zones that we were talking about last week, which is that 72.50 to 7200 or 72 cent area. So as you can see here, it's broken down without even a yelp of support. So broken straight through the 50. Now it finds itself at around that 70 sort of 50 area. Look, the real zone for this is the 70 cent mark. I'll mark it up on a chart and I'll show you what I mean. When you go down to the 70 exactly, you can see obviously it was resistance there, but you need to go out to a weekly to actually really appreciate how strong this level of support is. You can see here that it was very, very strong support right through this zone here back in 2018. It was resistance there, and it was resistance here again in 2019. Once again here. And now you can see it's actually also on the 20 moving average on the weekly. So a very, very important zone. Aside from the fact that it's actually a round number, 70 cent, it's a very, very important support zone. So it would be very, very surprising if it actually just broke through here without any support whatsoever. So the way to play this one now is probably riding it down into the 70 and probably hovering in between the moving averages and the 70 zone. So it finds itself here at this very strong level. So it can definitely short down to the 70 cent. If you find some short opportunities, like even on the 1 hour, potentially take it down to the 70 cent, or aim for the, if you go down to the 4 hour, that's probably going to paint a prettier picture. I'll draw a line at around the zone that I'm talking about, the 71 round number over here. Okay, you can see that when you go out to a bigger time frame, you can see why that level is significant through the support there. So this is the zone that we'll be playing until this gives us any more notice of where it wants to go. We're probably just going to scalp in between these two zones here. If it breaks the 71 up to the 50 moving average would be probably the next part. I wouldn't expect, after a sell-off like that, I wouldn't be expecting it to test these highs again. So probably play in this zone of around the 50 to 100 pips. I don't think it's going to break down past the 70 and continue to sell off. So realistically, if you do short it down to the 70, that's probably where you want your take profits, and then aim to potentially long it off there with a short-term change of trend and aim it back into the 71s or the 71.50s. So start to keep this range between the moving averages and the 70 zone, which should provide very strong support for a little while. All right, so we'll go out to the US dollar CAD now. This is the CAD on the 1 hour. You can see that it's had a very, very strong move up, obviously. It's broken down past the moving averages in recent trading, but when we go to the bigger picture trade, you can see that we've got a nice series of higher highs and higher lows on the daily, which is what we want. The moving averages are heading in the right direction, looking like they want to cross. The MACD has broken up above the 0, so we know the 12 and the 26 are in the right order for a long. What we're probably looking for here is a pullback to around this zone where it's marked in yellow. You can see it was very strong resistance through there. If it comes back and pulls back to that level, it's going to find support again on the moving averages we would expect, and then more than likely aim and test the new highs or the recent highs that we've got here at around the 134. And then once it breaks that, pushing on to the next zone, which is this black line here, resistance through there and support at this point here. And that is also the 200 moving average on a daily. So a very, very strong zone. That's actually the main target for this one. So we're looking for a little bit more of a pullback to the yellow zone here around that 132.80 area. It'll find support at the moving averages, or it should anyway. And MACD is still giving it plenty of power. So in the first instance, probably aim for around that 134, and then a broader picture, aim for the 135 area where the 200 moving average will probably pull it up in the shorter term. All right, so the US dollar Swissy paints a pretty similar picture. Hasn't sold off as much as the US dollar CAD has, but you can see that it's got the series of high highs and high lows that we want on a daily. It's well and truly above the moving averages, and they're both pointing in the right direction as well. So it's been a big week for US dollar strength pairs. So you can see here that the MACD is doing exactly what the CAD was doing, and we'll look at the dollar index in a second, painting a very similar picture. So with this one, we're probably looking for the same thing. We're probably looking for the pullback now. You don't want to be jumping on board without a bit of a pullback. So a pullback to the moving averages. It may happen around the cross, which would be nice. And then more than likely, the next point of call for this one is around that 94 area here. You can see that point of support, 2 touches there will more than likely give it some sort of resistance at this point. And once it breaks through there, a similar story to the CAD, we'll be aiming for the 200 moving average, which is around that 95 area. So a couple of good trades on this one. Just wait for the pullback. It'll confirm the lightning bolt again. A break of that high will send it more than likely to the 94 area, which is this zone here, and then onto the 95. So this is not going to move, as rapidly as some of the other pairs, but it is fairly solid and fairly technically sound at the moment. So it is behaving itself, and a pretty good trade if the technicals come back and test the levels that we want. We'll go straight onto the dollar index now. You can see this is very similar to what the Swissy was showing, and this is leading the way really for us. You can see that we've got a series of higher peaks and troughs on the stochastics, which is good. It really replicates what price is doing. And remember, what we want to see in price action and indicators is actually a syncing of what they're doing. So when price is making a series of higher highs and higher lows, and the indicators are doing the same, that's actually a positive thing. It means that the trend is positive. It's a solid base trend, which you can see it is. It's gone up in a very orderly fashion. It's tested the 20, pulled back on it, and bounced off it again. Now, this is a level that it's more than likely going to come back and test. If it's going to, I don't know if it even will come back all this way, because this is not really looking like it wants to, but it can. If you actually trade the dollar index, more than likely you'll be waiting for that pullback if you're not already in it. If you are in it, the logical place to be taking some sort of a profit is around that sort of 95-80 area. That's where we're pretty much aiming for. And if it gets up there, you can rest assured the USDCAD and the USD Swissy would have done the 200 move, which is what we were looking for in the last 2 analysis charts. So hopefully that will get the job done, get to the 95 sort of 80 area. But if you want to trade this one, if you're not already in it, you need a bit of a pullback. So it even needs to come back to the 93.50 or at least catch up to the 20 before it gives us a solid technical entry to potentially take it long. But still looking pretty good and doing the right things for a long move. All right, so we'll move on to the EURUSD now. Now, this one's broken out of that zone very clearly, the zone we were talking about. You can see what we needed was a breakdown below the 117. We needed a daily close. We certainly got that, and it broke the 50, it broke everything. Now, yeah, what we're fully expecting here is more than likely a test of this level. We would think that it would probably pull back up to the 117 at some point in the next day or so. It'll retest the 50 moving average. The 20 probably won't catch up in time, but it's still looking very negative. Like you can see the MACD is dropping completely. It's into the negative territory now, which tells us that the 12 is below the 26 moving average. So, don't be too concerned that the stochastic is in the oversold. It can stay oversold for a very long time and without any pullback. So don't pay too much attention to this on the time frame that we're looking. But more than likely what we're going to see is some sort of a pullback up to this level here, up to around the 117. So that's about 30 pips away. You could potentially scalp it if you get a smaller time frame change of trend. So you got it here at the moment. You can see that it's trying to make a series of higher highs and higher lows. It's come off the 20. So if you want to attempt to try and scalp it up to the 117, it is a potential trade. There's no question about that. It is a very small scalp. But, I'm not so sure the risk reward really warrants it. You need to have a stop loss of at least around that sort of 116.55 if you're going to attempt that. But it is there, and more than likely it will test this level before it continues to sell off. But I think the bias on this one is still the short side. So if you want to be looking for scalps or a longer term position, more than likely you want to be waiting for the pullback to this level here, and then look for a break of or a new low. So a break of the 116.20. The good thing about the euro and what I like about this trade is if it does break down, if it tests up here and breaks down this level and closes below the 116.20, the next level of real support is down at 114 sort of 30. So it's a long way away. In other words, you got several hundred pips of pretty easy trading, I would have thought. There's not a lot of support there to catch it. So once it does start to fall, it could easily fall a couple of hundred pips fairly quickly. So that's easily the more I guess the trade that you want to take, because the path of least resistance is where you always want to be trading in, and obviously the direction is fairly biased to the short now. So yeah, pull back up to here, and hopefully a breakdown of the 116.20, which will see it really short, and give us a few good trading opportunities down to the 114.30, which is the next serious support. So we'll now move on to the US dollar yen. This has been caught here by this support around the 104.60. It's bounced off it a little bit. You can see a couple of good rejection candles. What it has done though, unlike the other two US dollar based pairs that we just looked at, you can see that it's smack bang into the two moving averages. Well, there's a 20 moving average here. And don't worry about the blue one, it's only a 26 because that was off the MACD. But the 20 moving average is really pulling it up here. You can see there that it's going to have a little bit of trouble breaking through there. You can see that was also a support zone here, and this is around that sort of 105, sort of 50 area. It's got a little bit of work to do before it breaks up. Now, if it does break up past this level, more than likely the 106.70 is going to be the next point of call, which is around this green line here. That's going to be the next serious point of resistance for it. So it's got a little bit of room to move. The only thing about this trade is it's obviously got the 20 moving average right in front of it, like right in its face. So that, definitely is not ideal. I don't like placing a trade right into an area of resistance. So ideally what you want to see here is a break of the 20 moving average and then a retest of it. So this is a daily chart. If we get a daily break above the 20 moving average, then go to a smaller time frame. Make sure that we've got the lightning bolt effect on a couple of the smaller time frames, and then long it into the 106 sort of 70 area. Now you've got plenty of pips there. It's still currently at around the 105.50, even if it breaks at 20. So there's still the best part of 100 pips there. So it's not like it's only a small trade, but it's got a little bit of work to do before you get in this. It needs to really break this zone before it would get me interested in taking a potential long on this level here. Okay, so the last one we'll have a look at is the S&P 500. It's been another one of the big movers this week. You can see here on a daily chart, it's basically given us the series of higher highs and higher lows that we've been looking for quite a while now. So it's definitely a change of trend on the daily chart from a technical standpoint. It does find itself at a very, very strong level of roll reversal now. I'll draw the horizontal line and show you what I mean. And you've also, you can see here, obviously, that it's right on this level here, had trouble breaking through there, it was support there. But even if you go to a weekly, you can see that it was a very, very strong level way back in April. Okay, so this is a very strong level for the 32 sort of 30 area. When we go back to a daily, if it breaks this level, the more than likely target that we're going to be aiming for is the 3100. That coincides with the 200 daily moving average, which is very strong. MACD has switched to the negative though, so you can see that's pretty important. We can see that it's had a day of consolidation today, like last night's trading session didn't break this line. It tried to, but then pulled back. So price action certainly showed that this level is going to more than likely hold. What it will do from here is anyone's guess, really. Like, we're going into a very volatile period in October, so we're going to have to wait and see what the market really pushes to see whether it actually breaks this level and pushes down to the 200, or more than likely what it will probably do is come back up and retest the moving averages from above. This is similar to the Aussie USD, really. What you want to be probably looking at, you've got a solid level of support here. So maybe take some short-term changes of trend up and trade it up long into the moving averages. I wouldn't be going much further than those though, so probably 100 points up until it gets a daily close above these moving averages again. I wouldn't be interested in taking it any longer than the 130 or the 3330 here. You can see there. So 3300 at this level here. Okay, past the moving averages. If it breaks up above there, then maybe look for longs. But you could go for the smaller scalps, go for the 1 hour or even 15-minute changes of trend. Maybe take it long into these moving averages and have them as your take profit targets. So around that 3320 area, 3330. But if it does break the 3230 to 3220 area and gets a daily close below, as I say, for instance, it closes there tomorrow morning after a full session, and closes below this level, then I would be looking for either a retest of that level from the bottom, depending on how low it closes, or just continuing the short on the smaller time frames into the 3100 zone. That's the next real zone where it's going to find some sort of support. So you've got 100 points to the top side and basically 100 points to the downside. Either would make a reasonable trade. I haven't really got a bias to either of them. It really just depends on what the daily candle closes. If the candle closes below this level, I'd be going for the shorts. And if they get a change of trend on the smaller time frames at this level, I would be aiming for the 3300, which is where the moving averages are.
I hope everybody's had a great week's trading. We've had some really, really good moves, so hopefully you were able to catch some of those. And it looks like next week's going to be a pretty positive run because we've got some good moves setting up as well on some of the majors. So have a great weekend, and I look forward to seeing you all next week.